Look, let us be completely honest with each other right now because the economic reality out there in 2026 is getting incredibly heavy. If you are sitting at your desk looking at your bank account and feeling like you are running on a giant treadmill that keeps speeding up, I completely get it. You see the news headlines every single morning talking about how the stock market is breaking new all-time records and pushing past 7,400 points. But your daily life feels entirely different. Your grocery bills are absolutely insane. Your rent is taking a massive bite out of your paycheck. And that local coffee shop down the street just raised its prices for the third time this year. Oh shit, when you look at the official data showing headline inflation jumping straight to 3.8%, it is not just some random boring number on a colorful chart. That number represents the silent, steady, non-stop destruction of your purchasing power while you are working, sleeping, and just trying to survive. It means every single dollar you leave sitting in a basic savings account is losing its real-world utility day by day, month by month. The old classic playbook our parents handed down to us, the one that said work a stable job, save 20%, and wait for a safe time to buy a house, is completely broken. If you follow that outdated advice blindly today, you are essentially choosing to let the system slowly drain your financial future. I am not saying this to scare you or to cause unnecessary anxiety, because the last thing this world needs is another screaming financial doomer on social media. I am saying this because I want us to take a completely sober, realistic look at the board so we can actually play this game to win. I am right here in the trenches with you, acting as your personal wealth partner, sitting at my desk late at night, drinking coffee, and trying to make sense of this massive puzzle. Let me share a quick personal story that is honestly pretty embarrassing, but you really need to hear it so you do not repeat my stupid mistakes. Back when I graduated from college and landed my very first corporate job in 2020, I thought I had the entire world completely figured out. I had a stable paycheck, a nice shiny laptop, and a tiny bit of disposable income for the very first time in my entire life. Instead of being smart and patient, I let my massive ego take the driver's seat and started chasing the fastest, loudest trends on internet forums. I thought regular long-term investing was way too slow for a smart person like me, so I jumped headfirst into high-risk option trading and speculative garbage tech stocks. I was staring at flashing red and green charts during my corporate lunch breaks, staying up until 2 in the morning reading random hype threads, and betting on absolute nonsense. One morning I woke up, opened my brokerage app, and watched thousands of dollars of my hard-earned capital completely vaporize in a matter of seconds. I had this massive, suffocating knot of pure shame in my stomach, realizing I had just blown money that took me months of painful corporate grind to earn. That brutal failure was the exact moment I realized that trying to outsmart the market is a sucker game designed to keep you permanently broke. I had to completely swallow my pride, change my entire perspective, and build a boring mechanical framework that removes all human emotion. I stopped looking for the next hidden 100 times GM, embraced total lifestyle minimalism, and committed to living significantly below my actual means. I cut out the subscription services I never used, stopped buying luxury items to impress people I do not even like, and fully automated my savings by simply sticking to a strict, automated investment schedule month after month. I watched my net worth steadily climb from absolute zero to over $120,000. I am telling you this because I am not a wealthy institutional broker or a trust fund kid with a massive safety net behind me. I am just a regular peer who got tired of losing, sat down to do the basic math, and actually had the discipline to execute the plan. Here's the deal: building true wealth has absolutely nothing to do with brilliant flashes of genius. It is entirely about maintaining a consistent, boring routine right now. You have a lot of self-proclaimed finance gurus telling you to pile up cash and wait for a massive market crash because stocks look too expensive. That is a massive trap because sitting on a mountain of cash during a 3.8% inflationary period means you are actively choosing to lose real value every second. You need to get your capital out of the burning house of depreciating cash and place it inside the global economic engine where it can actually fight back. The most effective tool we have to achieve this is a process called mechanical dollar cost averaging into broad market index funds. You do not try to time the top. You do not try to guess the bottom. You simply set an automated schedule to invest your money every single 2 weeks. Let us map out a highly resilient 3-part portfolio blueprint that you can easily set up today and completely forget about for the next decade. First, you allocate 70% of your investment capital directly into VOO, which is the Vanguard Index Fund tracking the top 500 largest companies in America. When you buy a single share of VO, you are instantly becoming a tiny fractional owner of the most dominant, highly profitable corporations on the face of the planet. These massive companies possess incredible pricing power, meaning when their input costs rise due to inflation, they simply pass that cost directly onto the everyday consumer. By holding VO, your personal wealth is anchored directly to their corporate profits, which acts as a natural, highly effective long-term shield against inflation. Next, you direct 20% of your capital into SHD, which is a premium dividend growth index fund that focuses intensely on financial quality. SHD does not just blindly chase the highest current dividend yield, it specifically selects solid companies with a clear history of increasing their cash payouts year after year. This creates a powerful compounding flywheel because you take those quarterly cash dividends and automatically reinvest them to buy even more shares. Finally, you allocate the remaining 10% of your capital into VUG, which is a dedicated growth index fund that gives you direct exposure to high-tech innovation. This specific combination gives you a beautiful balance of massive core stability, consistent cash flow growth, and high long-term upside potential. The total beauty of this approach is that it takes less than 5 minutes of your time every single month to manage, track, and maintain. It completely frees up your valuable mental energy so you can focus entirely on expanding your main career or building your digital side income. Stop wasting your precious time checking stock tickers 20 times a day, reading frantic economic news updates, or stressing over short-term red days. Your primary job in this game is to protect your personal savings rate. Keep your lifestyle inflation at zero and let time do the heavy lifting. When the market takes a sudden dip and everyone else is panicking, you do not check out. You look at it as a discount sale and keep buying. When the market scales to brand new heights like it is doing right now in 2026, you do not hesitate or wait. You just stick to your robotic schedule. The entire financial system is wired to reward the patient, disciplined accumulator, and brutally punish the emotional short-term speculator. We need to stay incredibly clear-headed, tune out the constant consumer noise, and look at this wealth-building journey as a long-distance marathon. We are going to navigate these weird economic waters together, paycheck by paycheck, until we all establish our true financial independence. Look, think about how much noise is hitting your feed every single day with people telling you to buy this asset or dump that stock. It is exhausting, it drains your energy, and it makes you make rash decisions based on FOMO, which stands for the fear of missing out. When I was losing money back in 2020, FOMO was my absolute worst enemy because I thought everyone else was getting rich without me. I would see a screenshot of someone making $50,000 on a single meme trade, and I would instantly throw my own hard-earned savings into it. I did not understand that for every single lucky winner showing off their gains, there were 10,000 quiet losers who lost everything. The system wants you to be emotional, it wants you to trade constantly because that is how brokers and institutions make their money off your fees. When you adopt a mechanical strategy using VO South Carolina HD and VUG, you are essentially telling the predatory system that you refuse to play their game. You are stepping off the casino floor and choosing to build a fortress instead. Brick by brick, pay periods. After pay periods, let us think about the math behind a $120,000 portfolio. Because when you hit that first major milestone, something incredible happens. The compounding effect stops being an abstract theory in a textbook and becomes a highly visible force in your actual account. When a $120,000 portfolio moves up by just 2% in a single week, that is a $2,400 gain without you lifting a single finger. That is more than many people earn from an entire week of hard, stressful labor at their traditional 9-to-5 corporate jobs. That is the point where your money starts doing the heavy lifting for you, allowing you to breathe a little easier during these inflationary times. But you cannot get to that milestone if you are constantly resetting your progress by chasing trends or keeping your money in melting cash. I know it is hard to stay disciplined when your friends are going out to expensive dinners, buying brand new cars, and living high-end lifestyles on credit. It takes a massive amount of internal strength to look at that and say, no, I am choosing to buy my freedom instead of temporary status objects. Living below your means in 2026 does not mean you have to live like a complete hermit or suffer through misery every single day. It simply means you are being highly intentional with your capital, cutting out the waste, and prioritizing your future self over short-term validation. Think about the absolute peace of mind that comes with having a substantial wealth cushion when corporate layoffs are happening all around you. When you have a mechanical system working for you, you do not have to live in constant fear of your boss or tolerate a toxic work environment. You gain the ultimate leverage in life, which is the power to say no and make choices based on what is best for your long-term path. That is what true wealth means to me. It is not about buying yachts or showing off. It is about owning your time and your autonomy. So let us stop overcomplicating the process. Let us stop looking for magic shortcuts and let us commit to the basic fundamentals that actually work. Set up your automatic transfers to your brokerage account to trigger the exact day your direct deposit hits from your job. Split that money mechanically, 70% into the absolute powerhouse that is VU, 20% into the dividend engine that is SCHD, and 10% into VUG. Reinvest every single dividend check that comes into your account, letting the compounding flywheel spin faster and faster as the years go by. When the headlines tell you the world is ending, you keep buying. And when the headlines tell you the market is perfect, you keep buying. You become an absolute execution machine, completely detached from the daily market sentiment and focused entirely on your long-term accumulation target. This is how regular people like us build real, unshakable wealth in a modern economic system that feels like it is constantly rigged against us. We do not need a financial degree, we do not need access to private hedge funds, and we certainly do not need the approval of mainstream gurus. We just need our own discipline, our own clarity, and a solid community of peers who are driving toward the exact same goals. I'm going to keep showing up here, sharing my exact numbers, sharing my raw thoughts, and keeping you accountable along the way. No sugarcoating, no corporate jargon, just the raw, honest truth from someone who is actively doing the work right alongside you. We are going to protect our savings rates, keep our heads completely clear of the consumer madness, and win this marathon together. Stay incredibly disciplined, keep your financial execution completely flawless, and I will talk to you guys in the very next video.